Hey guys, welcome to another video. And in this video, we'll be giving you our weekly outlook and breakdown on all the fundamentals on all the most important currencies. And we believe in our view are important, all the fundamentals surrounding them, and all of the other technical and important aspects that we need to be paying attention to. Okay, so first things first, as always, let's look at the weekly outlook. Now, looking at this week, starting from Sunday, April the 11th, we've had an International Monetary Fund meeting, which is rated as medium impact. Okay, now for those of you who are not familiar with the color system, just to quickly break it down. So we have the beigeish color, beigeish orange color, which is low impact. Okay, so low effect on the price of the currency pairs. And then we have medium impact, and then we have high impact. Now looking through this week, okay, we have one piece of high impact news coming in straight on Monday, 10 o'clock in the morning GMT time, British summer time. Okay, as of March 29th, 2021. Moving forward on Tuesday, we have medium impact news throughout the day. Okay, we start off with pound-based news in the London session and move over into the afternoon into the US session with some US news, some high impact and some medium impact. Okay, midweek Wednesday is where things really kick off. So we see on Wednesday at 2 a.m. British summertime, we have the New Zealand rate statement along with the interest rate decision for the Royal Bank of the New Zealand. Now, I'll be touching on that in just a moment, but I just want to run through to see now, as a trader, for those of you who are aspiring traders, if you're a beginner, intermediate, even a professional, I think is an important reminder and is also good learning for you if you haven't got into the Forex markets or currencies market at all, to make sure that you make it a habit to look at the fundamental news. Now, I know for most traders, you are most likely a technical trader. And because due to the nature of how Forex is, the type of liquidity, the money that flows into the market, is very easy to be successful with solely technicals. But over my 6 years personally of trading, I found that it's very highly important to keep your eyes on the news. Okay, now technicals always leads into fundamentals. You can read what's probably going to happen before it happens, before they make a news announcement. But it's very important due to timing trading, entries, and more importantly, exits. Okay, now it's important, especially if you're a retail trader, which most of you listen to this probably are. Okay, the place that we find ourselves within the conglomerate of market participants is on the lower end. Okay, and so because of that reason, we don't have any type of money in all of our accounts to be in. If all of us in around the world place to buy in the market, we wouldn't have enough liquidity to cause the market to have a massive spike. And so we need to be able to understand the ebbs and flows of liquidity and money in and out of the market, which fundamental news, high impact news, whether it's data or speeches, has the ability to be able to drive price in certain directions that we're looking at. Okay, whether you're a supply and demand trader, which I am, or support and resistance trader, okay, these things still apply. So we always make sure, please make sure you always look at the news every single week. On a Sunday evening, wherever you are in the world, just make sure you have a look at what's going on with the news. Okay, so into Thursday, we have the unemployment rates and the employment change for the Australian dollar. Okay, so it seems like we have a very Asian week, okay, in terms of where most of the most important news is going to be. A lot of Asia sessions start. Okay, we have some more US news, so retail sales, okay. And on Friday, we have the GDP for China. Now, with the Chinese economy, okay, their news is high impact. Now, there are certain countries, and as you listen to more details in this channel and more videos in this channel, you understand our approach to how we observe the market. Now, China is a very large financial hub, okay, second largest superpower just behind the US in terms of money. But one of the biggest things which is highly important for you to understand when it comes to Forex and the Forex market, high impact news doesn't always translate the same way throughout different pairs. Now, the nature of China, because of the nature of the economy, their GDP is highly correlated to, or is highly dependent on their exports, okay, because China is a major exporting country, if not the largest exporting country in the world. And therefore, the way the central banks in those countries operate is more on a defensive standpoint. Their aim is not to try to strengthen their currency to become the largest, the strongest currency, because that would ruin their export, being competitive in the world market. They want to be as competitive as possible and dominate in that area. So their currency needs to stay weak. And so when it comes to high impact news around those currencies, if you want to straddle trade it, or which I don't recommend for several reasons, but which is beyond the scope of this video, you want to always make sure you pay attention to, even those high impact news, what is the nature of that currency. But just to keep my heads up there, I don't think this news should do much on most pairs, and most of the pairs we trade don't have the Chinese one in there. But if you do trade that, it's good to be important to, to keep your eyes on that if you do trade it. But with China, we see that they more have a pegging approach. They're trying to keep their currency at a certain price point, especially with the US dollar, to keep trade lucrative. Okay. So ending off the week on Friday, we have the Michigan consumer sentiment, which does cause a spike in the market, maybe 20, 30 pips at times, sometimes more on gold. And this week, we don't seem to have a highly fundamental week, but we do have some important points, which I would like to highlight over. So swinging back, kicking off with Wednesday, we have New Zealand news. Now, when it comes to fundamental analysis, for those of you beginners, again, if you're not too sure, we have three types of analysis. We have fundamental, technical, and sentimental, excuse me. Now, sentimental analysis is something that's quite subjective, and we won't be discussing it in this video, but we will discuss on those points. But when it comes to the first two, technical and fundamentals, I believe that they do marry together, and they have parts where they come together and then they separate. Now, with the New Zealand news and fundamental narratives, for you guys listening, I think it's important to understand that, especially what we've had in 2020 with the coronavirus period, which we're still facing right now. We're in the recovery phase, I'll say, more than the major pandemic. However, fundamentals are narratives that are occur in different countries, and you can have an overarching narrative and then narratives which play on a smaller scale within, the nation, or within, or national narratives or national fundamentals. Now, due to the coronavirus, we have an overarching fundamental scenario or picture and things that are taking place because of that across the entire globe, which is very rare. The last one we had was in 2008. And so because of that, whenever we're discussing, especially with this one, which is very different in nature from the last financial crash and massive narrative across the world, we always need to have a central focus as what's going on with the fundamentals of the overarching narrative, which is the coronavirus, or with the COVID situation, the pandemic, okay? And so because of this pandemic situation, we need to always discuss and think about how price, or what is going to happen with price action, and how it could be affected long-term and short-term. And so I want to bring your attention over to something that's been in the news quite a lot recently, okay? And it's to do with Astra-Zeneca. So I'm using BBC News. So this was written 3 days ago, and this is from the situation with Astra-Zeneca, if you haven't heard of it already. So it's titled, "How does the Oxford Astra-Zeneca vaccine work?" Now, AstraZeneca is a major pharmaceutical company, which has been a major backbone in providing recovery for the pandemic situation by providing vaccination solutions, okay? Them and Pfizer and other companies have been working very hard to be able to provide a vaccination to help, to clear this overarching narrative that I've been discussing of the pandemic, okay? Now, what we've had recently is it's been found 79 people, 2/3 of them women, have experienced clotting after receiving the first dose of the vaccination. Now, the vaccination comes in doses, so you have your first one and then you get your second dose, okay? And how we've had it in different countries are approaching how they release the vaccination in different ways, but ideally the aim is to go for the most vulnerable parts of the population and scale that way until they get to the least vulnerable. So maybe young children and healthy young adults and etc. Okay. Now, what we see here, and which is the alarming thing so far, is that now, for me, in my scientific background, I did 3 years of chemistry and 1 year of pharmaceutical science as a master's degree. Okay. And during my period of learning medicinal chemistry, I think one of the biggest issues that I can say, which is why there's been so much of an alarm over this, is this is probably in history one of the quickest vaccinations or antidotes being provided for a virus which is unknown. Okay, the COVID situation, even though there are coronaviruses, which is just the structure of the virus, but this type of coronavirus is something that hasn't been seen before. Okay, and within 9 months, they've already come out with an antidote, which many people have their reservations, from highly educated medical professionals all the way down to the layperson who are more in the conspiracy realm of things. But either way, this has come out quite fast, and we can all agree that it has come out quite fast. So there are high risks that some people see in this vaccination, because they believe that it's come out too quickly, they haven't tested it enough, and it's quite scary. Now, we've had quite a number of people, especially for me being in the UK, who have been vaccinated, and we'll look at the numbers in a moment. But now more than 200 million Astra-Zeneca viruses have been administered across the UK, okay, by the end of March. And what is found in that 20 million, we've had 79 people, which is a very minute number, but that doesn't take away from what's happened. Two-thirds of these women, of the 79 people who are women, have experienced clots, blood clots, thrombosis, and after the first vaccination, and 19 of them have actually died. Now, even though I can't say it's just 19 people, because every life matters. But however, I think the alarm now, which is raising questions around the world, is that how safe is this vaccination? Now, because of the confusion around the vaccination, and many economies, and the world economy suffering a depression due to this, and many countries not being able to open up fully because there isn't a solution to be able to gradually open things up with, is raised a lot of questions and alarms as to, should we actually take this vaccination and use it? Because this is quite serious, in the sense that there aren't many firms out there who actually have a vaccine for the coronavirus, okay, has any proof of working. So if this doesn't work out, then the question is that the coronavirus or the pandemic situation is going to continue to, run out or keep going until there is a solution. And this is the biggest fear. Many countries, famously the EU and other places, are starting to have their reservations as to what's going on, because there's been quite a few sketchy things that have happened. However, all right, now the MHRA said about 4 people in a million would normally be expected to develop this kind of blood clot, though the fact they're so rare makes it, a usual rate hard to estimate. Okay. And the regulator said it's not been proven that the jab has caused the clots. Okay. And its head, Dr. June Rain, said that there is a link was firming up, and more evidence will be needed. Okay. Now, this is the key that I'm going for. Now, I'm not saying that those lives don't matter whatsoever, but I guess for 20 million people to have received it and 79 people to have had any effects, I think that is quite a good ratio, especially in the time frame that they have, produced this vaccination in. Okay. And so the risk seems to be relatively low. However, because people have died, and already because of the coronavirus itself and the nature of what's happened, it is raising some questions that are rightly to be asked. Okay, so there is a rare form of, now it's called CSVT, cerebral venous sinus thrombosis, okay, which is the large veins in the head, okay, and this is what we've seen, especially in the younger women. Now, here are the symptoms, which is not the most important thing, and here is the advice. Now, because of this, and this is the key that I wanted to get to before I get to my next point, is what have other countries said about the AstraZeneca vaccine, because it's important. So EMA, or the European Medicines Agency, says that the clotting should be listed as a very rare vaccine side effect, okay, because of the ratio from 79 to 20 million. Now, after studies, or the studies looking at 86 cases in the EU, the EMA concluded that the benefits of the vaccine outweighed the risk, and there is no definite causal link, which I would agree with. Okay, I'm not saying I'm going to take the vaccine or I'm not. That this is not the video for that. Okay, but in other places, like for example, Germany, Spain, Italy, they have suspended the use of the vaccine in people under 60, while France recommends it only to be given those aged 55 or above. And Denmark has completely suspended its use. Now, there's some news here that I think is important for what we're looking at going forward. And it's come out from Australia, and well, from different places, it's come out in the last 2 hours. So this is kind of fresh off the press. Now, just before we move on, I want you to understand that this is just an outline of what we're seeing, or what's the narrative and the picture that we have right now. We're still in the recovery phase. I would say we're out of the major period where there was just mass death everywhere. Very, very depressing period last year. However, we're more in the recovery phase, but as usual, there are bumps across, trying to cross different bridges to get to the ultimate goal, which is for everything to open back up, for there to be the control of the pandemic situation, and for life to continue as usual. Okay. Now, kicking off with what we have in Australia, we have some news here. Okay. And I would like for you guys to see this news. Okay, this is all fresh. So we see here, Australia has abandoned COVID-19 vaccination targets after new evidence on the Astra-Zeneca, Zeneca shots. And this has come out at 12:43 a.m. Okay, GMT time. Okay, and this was just updated literally 2 hours ago. Okay, so it's a 2-minute read. So here we have Reuters, which I think is a very reputable place to get news from. So if you're looking for a place for financial news, Reuters is a really good place. I think they're too large to, bring manipulative news. Of course, you want to check your sources, but they're not so bad. So shout out to Reuters. Anyway, let's read this. So Australia has abandoned a goal to vaccinate nearly all of its 26 million population by the end of 2021, following advice that people under the age of 50 take Pfizer's COVID vaccination rather than AstraZeneca. So now you can see we have this situation here where we have AstraZeneca, well, countries are doing, not necessarily Pfizer or AstraZeneca. I know they want to make money, but Pfizer and both AstraZeneca, I believe they're both trying to provide solution and of course make money also doing so, because it's only fair. Now, Australia, which had banked on the AstraZeneca vaccine for the majority of its shots, had no plans to set any new targets for completing its vaccination program. So Prime Minister Scott Morrison said in a Facebook post on Sunday afternoon. Interesting. Now, he said, while we would like to see these doses completed before the end of the year, it's not possible to get the targets given the many uncertainties involved. So authorities in Canberra changed their recommendations on the Pfizer shots for under 50s on Thursday, after European regulators reiterated that the possibility of links between the AstraZeneca shot and the reports of rare blood clots, which we just talked about now. So you can see on one side, they're saying that this is a super rare risk, and now different countries are responding in different ways, depending on their own advice from their own scientific establishments, and also from, prime ministerial advice. Now, this is important because one of the things when it comes to countries and looking at different nations, and this is important now, being a currencies trader is more than just, for me personally, just being a technical analyst and being able to draw some sort of trend line or something like that. I think it's a lot deeper than that. You want to understand how nations behave and how they think. I think currency trading is a lot deeper than, the average just looking at the news that comes out on FX Tree. I think it's really important for you to have an understanding about how the mind of governments, the mind of how they think, because it will really help you to understand, currency from a very different perspective. And this is why, these weekly breakdowns will be coming fresh to you every single week. And it's important for you to take this in mind when you're moving forward, trying to become the trader that you want to be. Okay, now moving forward, Australia, which raced to double its order on the Pfizer vaccination last week, had originally planned to have its entire population vaccinated by the end of October. Australia's hardline response to the virus largely stopped community transmissions, which I do remember. I think I praise Australia, and I think it was really good how they handled the vaccine very professionally, very quickly and efficiently. But the vaccination rollout has become a hot political topic and a source of friction between Morrison and state and territory leaders after the country vaccinated only a fraction of its 4 million target by the end of March. Okay, so right here we see that if I was thinking about this now, when you look at this news, you think, okay, what does this mean? Is it bad? Is it good? Well, it depends on what standpoint you're looking at. Now, if you're looking at this from a investor standpoint, let's talk about, for example, foreign direct investment. If you wanted to make some investment in Australia and there is this confusion here, would you really want to put your money into the country to invest in the economy right now, or would you not? And it actually does depend on several factors. So when you're looking at these pieces of news, you want to take a step back and not think about just you, because I mean, yes, okay, if you took a holiday to go there, probably you can't even take a holiday to go there right now. But if you did, would you be able to, enjoy a full experience? Most likely no. I don't think there's any country would. So that's a no. But then if you're investing in this country to do business, you want to think about, would you be held back by different uncertainties? What would happen? And when you translate this into currency, currency is based on supply and demand. And of course, the supply we know in the fiat world is unlimited. As many trees as there are growing out of the ground is as much currency as you can have printed. That's just the truth, sadly. When it comes to the crypto space, we have a great blessing that it's not the same way with things like Bitcoin, but that's for another day. Now, for that reason, if you look short term, if I was to look at this, I think we have a bearish outlook for the Australian dollar, not for too long, but I think this delay may cause the price to end up in a range. Okay, there might not be much activity, not as much volume, possibly, okay, due to this factor. On the other hand, we may have a scenario where, okay, this might be a perfect opportunity for prices to stay cheap. Investors might want to get into the economy whilst before things open up, which is another way of looking at this. So we may actually have some action. Okay, so I'm just throwing out this point to you. I'm not saying it's bullish or bearish or whatever at the moment, but we're just discussing this and trying to understand where we are. Because really and truly, when the economy opens up or there's signs of an opening up, really because of this overarching fundamental of the the pandemic, we're going to see, the more countries open up and ready to accept visitors, or the less ready they are, or the more people have been vaccinated. These are the measures for now that are going to really help see growth on, currencies. This is a very strange and different fundamental, but this is where we are now. Whenever there's an overarching fundamental around the world, you really want to get the mind and the picture as to what makes things tick, what's going to make a currency stronger or weaker. Okay. So this is the news that has just come out. All right. Now, to finish off this news, about 1.16 million COVID doses have now been administered, Morrison added, noting that the speed of the Australian vaccination or the Australians vaccination program was in line with other peer nations, okay, including Germany, France, and ahead of Canada and Japan. All right, now Australia began vaccinations much later than some nations, partly because of its low number of infections, which stand at just 29,400 with 909 deaths since the pandemic began, which is absolutely amazing, okay? And if you think about this, compared to the UK, which the numbers are a lot higher, okay, in the terms of the number of deaths, I think they're in at least in the 5 figures in the UK for sure. Now Australia's population is half of the UK's population roughly, but they've had only 909, which is absolutely outstanding, which I say again, we have to clap for the government of Australia. They really did a fantastic job there. And we'll look at the technicals in the chart in the meantime, but I do think right now with this situation with Astra-Zeneca, and it could be just a media play just to delay things, and things are going on underneath the rug that we don't know. It usually is, but from what we can see from the surface, if we're thinking about money that will be transacting in the M3, M2 money supply, then we need to pay attention to these kind of things. All right. So if we come back here to round this off, if I think about the Australian news, and we'll come back to the New Zealand news in a moment, but when it comes to employment change and unemployment rate, I do think that the price will have a spike. I think for the meantime, because of the uncertainty, all right, wherever the economy is at in its level of recovery, I believe it will stay there. And so with these rates, I do expect them to stay around the 5.7, 5.8. I do expect there to be an uptick in employment of 0.1% roughly. And the consensus is that it could be the unemployment rate could actually be lower, and we could see more employment taking place in the meantime. And we could see here the previous unemployment or the employment change was 88K up, and we have a positive 35K, which is lower than last, which is understandable during, especially if we factor in the news that's just come out not too long ago. Okay, I do think that we may see something happening next month. Now, this news is for March. So in April is when we're going to see the effects of whatever happened in this month play out in when we get to May. But from what we saw in March and them not hitting the target and things of that nature, even though they plan to, I do think that this number, we will see some movement, but not much. Okay, the overarching fundamentals is heavily weighing on the price of things. And so the Australian dollar, whichever technical direction is moving in, should either range or continue moving into this week. And as things begin to become more clear, then we'll start to see the price moving again and where it should be. All right, now moving forward with New Zealand, same kind of thing. Now I want to come from a different angle. Now with the New Zealand dollar, I do expect, first of all, the interest rates to stay the same. Now the Federal Reserve is what we look at to make sure. Now, this is important. You always keep your eyes on the Federal Reserve. The US dollar is the world reserve currency of the world until further notice. And so if the Federal Reserve makes any action on their interest rates or they don't make any action, okay, central banks around the world are very highly unlikely to change their interest rates themselves, especially in a situation like what we have with the pandemic. It will be very wise to keep interest rates low, okay, to encourage spending, to encourage economy growth, to make the price of money cheap, if you want to put it that way, okay, to encourage in lending, to encourage, the economy to pick back up again. And so I don't expect these interest rates to change at all, okay? Now price may still have some jumps in it, and we may see some price action movement based on that. What I do really want to see, which we will break down, is going to be the rate statement that comes out at 2. I would like to read the rate statement to understand the mind of where the parties involved in the Royal Bank of New Zealand, or what their mind is, what is their outlook for the future. I really would like to see that and understand where they're at. Now, again, the vaccination, the pandemic situation, this is really the factors that they're weighing on to be able to understand what they're doing. Their quantitative easing programs, their credit facilities, and etc. are really going to be heavily dependent. Now, the inflationary targets and CPI may change, but especially when it comes to the quantitative easing, or if there is going to be any tapering, which I highly doubt, these are the things that we want to be watching out for when we're moving forward with what we have. Now, I'm going to quickly go over here. Now, for New Zealand, one thing that I'm looking at the moment is their trade balance. Now, the trade balance has narrowed down to 181 million in February, down from 551 million in the same month in the previous year. So just before the COVID situation struck. Now, looking at what we have so far, one of the things that I'm happy about right now, we haven't received, we will know what's going to happen on the 28th of April. We'll know what the balance is, or the trade balance is for New Zealand. Why is trade balance important? Because it's important for us to understand. Now, trade balance, if you're not too sure what it is, the simplest definition for trade balance is the net exports or imports minus exports, or exports minus imports. If a country has more exports than imports, then they should have a positive trade surplus, which is good. Okay. And if it's negative, then they have a deficit, okay, which is not so great. Okay. Now, New Zealand is a very highly agricultural country. I think a lot of the lamb, especially meat that comes in the form of lamb, comes from New Zealand, okay, and other products as well that we really do need. And at the moment, it seems as though we're in a positive. We're at 181 million, which is positive. And so we can see that we have more exporting going out. So New Zealand is still doing business. Of course they will, but they're still exporting more than they're importing. Okay, which I guess consuming would be down, okay, for the moment, and consumption will be up, but it doesn't mean that they won't be selling out a lot. Now, in March, I do expect this number to possibly increase. Now, the TFT forecast is saying 210, which is roughly around mine, 220, 210, but I do expect this to increase, even though, we still have the pandemic situation happening. I do believe there's recovery, and I expect New Zealand to increase in their recovery very soon. Now they're predicting that it should be 700 million by June, which will be exciting to see. But I do believe that we're going to see more and more exporting happening, more demand, which would increase the demand on the New Zealand dollar. Okay, and the foreign exchange reserves for the New Zealand, for New Zealand as a country should increase, and more demand for the New Zealand dollar, which can drive up the strength of the price moving forward. And so this is what I'm expecting. And the reason why I'm going from this angle, because New Zealand is one of those countries who are their GDP is highly dependent on exports. Okay. And so it's important for them to get these exports coming through. Okay. So I do expect to see that. Now, one of the things that I wanted to just quickly look at here. Now, with the New Zealand website, if you guys want to ever get any information, just as a shout out to them, you can quickly go to you can type this in on Google, but this is their website. And when you want to look at statistics or any of the details here, we have it all at the top. Now, what I usually do is I go for statistics and I look at things like exchange rates and interest rates, which are important to me. So if I click on this here, you'll be able to find out the details. I believe I'm already on it, so I don't have to. But also, one of the things that I would say for those of you aspiring to understand fundamentals and analyzing things of this nature is to look at key graphs. So the key graphs that we want to look at would be the 90-day bank bill rate, exchange rate, okay? And then we have the real GDP, okay? Current account balances, mortgage rates, okay? And then house prices, household debt, and employment. These are the figures here. These are the figures that I like to look at because it helps me to understand, what's going on. So for example, things like CPI will be there'll be key figures moving forward, especially as the world opens up and recovers more, that we'll be wanting to look at to understand, as a nation, what's going on there. Okay, which I'm not going to do in this lesson, but this is my view when it comes to New Zealand anyway. Okay, so my eyes are heavily fixed on the New Zealand dollar and Australian dollar to see what we get going forward in those aspects. Okay. Now, what I like to do always is you can see up here that I have a lot of pieces of news here, and I always like to keep my eyes on news to observe, what exactly is going on, because this really does help you to understand. Trading Economics is a really great website for you to understand these factors here, for you to see, what's going on. And there's also news here for you to understand what is taking place with different currency. Okay. Now, looking over, the next place that I would like to look at, all right, is my home country, the UK. Now, coming back to where we are, I would like to just take some time to just have a look at what we have going along here. Now, similar to what we have here when it comes to the UK. So if I pull this up here for you, I've gone on the government website and I just wanted to have a look to show you what we have going on. Now, there's roughly around about 65 to 70 million people that live in the UK roughly. And so we can see the first dose, we have 32 million people as of Saturday, 10th of April, and I'm sure this will be updated very soon. We have 32 million people who have received the first dose, and we have 7.4 million people, which I think are in the highly vulnerable category, who have already received their second dose. I believe all are from the Astra-Zeneca. Okay. And so total vaccinations given is 39 million. Now, when you pull up this chart for you to see, we can, I've chosen to use the cumulative so that we can see what's happened. So since the 10th of January, moving forward, all the way up to here, the 10th of April, okay, we've seen a massive increase, especially around the February times, a very, very steady increase in the number of people who've received their dosages. Now, the UK itself has many overarching fundamentals in the nation, and then we have the overall, pandemic situation, which is the main fundamental for all of us. But saying that, in the midst of, recovery coming out of the European Union, Brexit taking place, and still some complications in different aspects around that, even though we finally, came to an agreement, in December, getting into next year. I think that it's important for us to always keeping our eyes on what's taking place in the UK, simply because even though it's not in the European Union, it's still in Europe, okay? And the UK is leading the way, I would say, in its response, at least in the vaccination period, and doing a fantastic job of doing so. And so with these numbers, looking at the pound, we've had a very, very strong pound. I believe literally since March 2020, and we'll pull up the charts in a moment, we've seen nothing but bullish action on the pound, okay? Now, because of this situation we've had, we have seen a bit of price action on the chart, which is giving bearish signals, but I do expect the pound to continue to recover and to gain strength, short term, okay? Now, all of the monetary facilities and regulations and things that have happened in order to keep companies afloat, to keep people afloat, and to keep the country afloat, more importantly, I think those monetary measures, which is usually quantitative easing, we'll see those things later on, much later on, maybe 2024, 25 to take effect, or 2023 at the earliest, in the negative. But for now, I believe that the pound is still very strong, and we can see a very good response, okay, going forward. Now, if we click on by nation, okay, we can see that we've had a lot of second doses coming in from England, which is a good sign. And so with the Bank of England, I think it'll be important to keep our eyes on what Andrew Bailey says in the future, okay? There have been a lot of discussions around, the COVID issues and things along that sort. And so I think it's important for us to keep our mind, steady on what he says, okay? Because especially with, there are other countries who their only fundamental really is their overarching fundamental is the, pandemic. However, with the UK, we're in a special place because we've just come out of I would say, financially bruising period of the Brexit situation, along with what's happening consistently with the vaccination. And always you do have to think about this. Where do they get the money from to be able to make all of these purchases and still sustain the economy and have things like bounce back loans? For those of you from the UK, you'd know what I'm talking about. There are many recovery protocols in place, and which all means that there's been a high amount of quantitative easing. So one figure that I would suggest for all of you to be keeping your eyes on, which I am, is definitely going to be, quantitative easing, the rate of quantitative easing, how much M0, M1 money supply has come in, whether it's digitally or physically, recently. So saying that, there isn't any news coming out on the pound, but I'm just keeping my eyes and giving you just some advice as to what I see. For the moment, it seems like there isn't any interruption with the pattern of how the UK, I believe the UK are going to continue using the Astra-Zeneca vaccination, okay? And because the numbers are so small, if we go back here, all right, I can go back here and show you that we still have, you can say that this is the line that we're keeping our eyes on. The UK's medicine regulator, the MHRA, says the benefits of the vaccine still outweigh the risks, okay? Now, any country who's pushing towards, now again, step back and think, a few levels higher in terms of money. we think about institutions and big money people, foreign direct investment, even though, yes, we still have a pandemic at large. However, to see something of this sort where the UK's, medicine regulator is saying that the benefits of the vaccine still outweigh the risks is a bullish sign, because that means we're looking to continue vaccinating people, which means better signs of recovery, which means that the economy is going to open up. There's going to be more demand for the pound. There's going to be more activity in the economy, which should equal to more money flowing, more business going on, etc. For us, I'm making this video at a historic period of time. We're officially opening up for I would say a major aspect of the UK, especially in London. For me being a Londoner, that was closed, is now being opened up, because we can actually go back to the gym again, which is such a sigh of relief. But this is where we are at the moment. And so for me, I still believe that the pound has some ways to go from a bullish standpoint, and I expect that to continue. Okay. So I'm going to switch over to the charts. Okay, guys, so I've pulled up an important chart to kick off our short technical analysis. So one of the most important things here for us to have a look at would be the dollar index. Now, the dollar index is a one of a kind, because it's probably one of the only charts, if not one of the only assets available that you can actually look at to have a good idea as to the strength of the dollar, which is important across the currency now, across the currency market. Now, the US dollar, because it's the world reserve currency, okay, and the largest currency in terms of the number of pairs. Now, approximately 90% of all currency pairs around the world are paired with the US dollar. So by far, the dollar has the largest reach in terms of currency and exchange. And it's important for us to have a look at the dollar as a starting point. So looking at the DXY is a very, very simple chart. Now, what makes the price we see here is a mixture of, now for the sake of teaching, I'll just put it here just for now in this first episode. I believe as you follow us, you should be very familiar with these basket of currencies. So we have a basket of currencies, okay, which make up the DXY, okay, and these are, I'll put these out here. So we have the euro, which by far is the largest. So we're looking at around about 57%, okay. These are just not rounded up, but these are just whole numbers that you can use. And then we have the Japanese yen, okay, which makes up approximately around about 13%, 13 to 14%. Okay, I'll say upper towards the 14% side. And then we have the pound, okay, so I'll put this here, GBP. So the pound is roughly around about 11% of this. Okay, then we have the Canadian dollar also. So the Canadian dollar falls just beneath 10% at roughly just at 9% bang on. Now, because of space with MetaTrader 4, what I'm going to have to do is add on another line here. So we also have, okay, the Swedish krona, so SEK, which is 4.2%. And then ending off, the final currency we have here is the Swiss franc, okay. Swiss franc. So we've got 3.6% right there. Okay, so this is what we have here. Now, how do we use the dollar index? Very simply, what we want to do is to work out how the strength of the US dollar based on what's going on with this dollar index. Now, this is not the only way, and I wouldn't advise you to take a trade based on the dollar index only versus a US dollar paired currency, whether it's the base or the quote, but we can use this as a starting ground to have an idea as to what we're looking at, especially when we're looking at AUD/USD and NZD/USD, for example, which will be in my sights this week for trades that we could potentially take on them. All right. Now, very simply, to understand this, when the US dollar goes up or the US dollar gains strength, okay, or the US dollar becomes stronger in its currency, in its strength, then this reflects on the DXY also going up and vice versa. So the US dollar and the dollar index have a direct correlation, and currencies that are paired against, so that when the dollar is a quote currency, all right, so just to put this out here for explanation, all right, so if we have USD, which is the base. Okay. And then we have a currency here, X. All right. Now X can equal to any other currency. All right. So, and then we can have this as our base. And then the other side we have is when the US dollar is the quote. So X would be any other currency again. And then the US dollar here would be the quote. All right. So I'm going to put this here. So when the DXY is going up, then this should be going down. Okay, the US dollar should be gaining strength, which means that X currency, you can't get as much dollars with X currency as you could before because the US dollar has gained strength. So here I'll say this is an inverse correlation. Right? And here we have a direct correlation. Okay, direct correlation. Okay. So looking at what we have here, how can we use this? So if I look from the weekly perspective and then down to the monthly. So from a monthly perspective, the overall bias is bearish and of the US dollar is losing strength over time. We can see that in the 2000s, we had the highs of around 121. Okay, and this is in dollars. And we dropped all the way to the lows down here during 2008 in the financial crash of 70. So at the moment, we've had this big bullish run. Now, for me, this is an injection of artificial liquidity. This is institutional sponsorship for sure. Okay, but either way, we've had this massive increase, and this is where we've got to here. Now, currently, the price is hanging around the 103 mark, and I do think there is room for us to go upwards. Okay, coming into what we've had in 2020, we had a huge spike here during the coronavirus period, and then a spike down. So it was a very strange period of time. We had a low of 94 all the way back up to 100. And currently the price is trending lower. Okay, but at the moment, we're still within this area of demand right here. Okay, and there is a potential for the price to go long. Okay, the price seems to be giving reversal signatures for a potential long. And if it does do so, I do think that we may get a push further on. Now we have this formation of double tops here, which means that the price would definitely want to run these highs. Okay, probably a lot of stop losses above this area right here, 103, and probably expecting the price to run back up here. Now the next area of supply, which seems to have a lot of high volume generation with a lot of spiking, is around about here, 105. Okay, so this is why I'm saying that possibly in the short to midterm, we may see a very strong dollar or increasingly strong dollar as things move forward. Okay, especially if the interest rates start to increase, that would be big bucks for the institutions, because credit lines, money markets, things like that will be more expensive for the layperson. But this is my picture for what I'm looking at. So how can we correlate this? Now I'm going to pull up the true charts I'm really looking at. All right, for now. So what I'm going to do quickly is pull these up here very quickly. I'll start off with the Australian dollar versus the US dollar. Now, the Australian dollar versus the US dollar is a major pair. Now, NZD-USD is always debated as to whether it's a pair or not a pair, or not a major pair, or is a minor pair or whatever. But to me, NZD-USD in my mind is a major pair also, just for those who are wondering. Now, looking at AUD-USD from the monthly structure, we can see that we're clearly very bullish, and I do expect that to continue. Now, over here, we have a very interesting scenario. Now, in this video, this is not the video for market structure. But when I look at this market structure as to what we've had, if we were to use an A to B swing here, from this A to B swing here, the coronavirus period provided a very interesting scenario where we've had the wick of the candle close beneath the A point, but not the body, which means that this bullish structure is still in play. If the body had closed beneath here, then we may have been seeing a weak Australian dollar, but what we've seen is a very strong recovery. And I expect that recovery to continue. And moving down into the weekly and more daily trends, I mean, if you were to draw a trend line here, now I don't trade trend lines, okay, for those of you who know me, but if you were to just draw a trend line based on market structure, okay, or if you wanted to draw a channel for those of you who are channel traders, either way, all the way down here, we have kind of had a break of this channel. Now, I prefer probably not to use this channel. Trend line is easy enough to use, but as we can see, getting into May, June, we see that we had a very strong break above, for the first time above this bearish trend line or this bearish narrative, which has been hanging around since 2008. And I expect this to continue moving forward. You can see the price has broken past this area and the structure pulled back, and now we have a continuing long, which I expect to continue moving forward. Now, as we can see here, this is fundamental and I guess technical from some aspects too. The price has entered into this very strong area of supply. Okay, this area of supply right here, the liquidity in this area was responsible for pushing the price down from 2018 all the way down to 2020. And the price has just reached back into the same area. So you would expect now, I don't use the term retest, but I guess if you wanted to call it that, the price has tested this area or this level, but the price has returned back into this area of supply. And I believe that we still have quite a strong bit of liquidity holding the price and acting as a barrier for us breaking forward. And on the fundamental side, due to the uncertainty, I think we would see, some weakness. So you can see the price action is not very clear. We have a lot of wicking, not a lot of clean structure in what the price is trying to do. I don't think this will last forever. I think once there is a clear decision along with, some technical alignment going forward, I think the Australian dollar does have room to push forward. So this is why short term, I do think the Australian dollar, we should see some bearish price action moving forward. Now, on the daily, now if you're not too sure and you're not familiar with MetaTrader, on the daily time frame from one line to the other represents one trading month. At the moment, coming into March, right, we've had a run of these equal lows. So many of the pattern traders who trade double bottoms have been stopped out if they were holding trades to go long, because it does look like a head and shoulder narrative pattern if you trade patterns. And I expect the price to dip lower personally for me. Looking at this price action here, what is holding this area for now is this major demand zone here. If there was a body break beneath this demand zone, if we had a body of a candle close beneath here, and then the price returned to use this for a flip for supply, we could see a continuation short for a few months, just as a pullback until we get into some areas of, significant demand in order to push the price to the next levels into the 80s. I expect the price to get into the 80s in the next month or two. And once we put past here at 82, I believe that we're going to see a very fantastic run moving forward. Okay. Now, if I zoom back out to the weekly here, I think it makes a lot more sense when you notice that this area of demand right here, or if you wanted to use the large one right here, is what's really been keeping the price. Now I'm going to use the wick here. Is what's really took this price to where it is after it broke past this very, 2-year trend line right here. Okay. I do expect the price to push further along after it gets down here, but I'd like to see the price go for some lows, run this low maybe down here from last year and continue. And so conservative targets, if the price was to go in the short narrative, would be down to about, the next kind of lows available, and possibly even the low all the way down to here of 2020. So the low of December back into this demand area, okay, where the price really took off from in the beginning. So, I mean, I would expect the price to go for this low, which is, we're at 74. So roughly around about 150 pips, 147 to 150 pips. And possibly the low of December right here being taken. That could be a great area for the price to reach out. If you would like to drop even lower, we may even see something around 71. And I'm expecting the price to roughly get around about here. So about 71,636. So if I was to put these as T1, so a very simple T1 for a bearish narrative, if the price does play that out. Now, this head and shoulder pattern is not what I'm basing the short on, but we could have the price follow this narrative. But in order for that to happen, I would expect the price to make some sort of long scenario to deceive traders into a long before the short and etc. So, I mean, target 1 would be here. Target 2 would be round about this low right here. If I put this here. Target 2 will be right here. And then we'll see target 3 reaching back down to around about here. Okay. I think these three targets would really produce a fantastic some opportunity on the short side. But, I would like the price to be able to use some sort of areas of either supply or reoptimize demand for supply in order for the price to sell off. But we'll have to really wait for, I would say, between Monday afternoon to Tuesday, when the US session really kicks in, to see what kind of money comes into the market to push the price lower. In the long scenario, if the price doesn't follow through, then I'm expecting, first of all, this high to be taken. And then if the price follows through with that long, what I would do is put the blue here to represent the bullish action. I think my first target on the bullish side would be this high right here, the high of March. And then moving forward, I expect the price to go for this high and make its way. And this really does depend, I would say fundamentally, and the signs will be in the technicals, married with the news to see what we get. So definitely target one would be the high of March, and then target two, I'll be looking for, highs around here. Now, if we pair these two together, all right, we can use the dollar, especially I'm using AUD USD. Now you can use crosses, you can use AUD JPY and etc. Okay, to be able to trade the Australian dollar, depending on your trading style. But what we can do would be to correlate to see what we have going forward. If we see an, push up in the price of the strength of the dollar, then we'll be looking at this inverse correlation that possibly we might see, a short taking place. If this price pushes short and we see, even these lows taken down here and the price starts to run down further, then we may actually see AUD/USD go long. It does depend. There are a few factors that, we would be looking at in order for us to make our final decision. But I just want to give you something that you can work with and take home with you, or watch at home with you, so that it can help you out. So finally, if I'm looking at NZD/USD, here, let's go right here. So NZD/USD moving forward. Okay. So NZD/USD has been, distributing longs and shorts all over the place. We had a massive long and short, but since the beginning of April, we can see that the price has entered into this range right here. And I think these ranges are always good to me. A lot of people don't like ranges, but I like ranges because I believe ranges show some very good action that we could take advantage of, whether trading wise or whether for us to be able to plan for the future. Sometimes I think it's necessary as a trader to have a trade break where the price is in a range and you really can't do anything. It gives you time to think, but if you look at this range as to where we are, okay, the price could go either way. Okay, from the structure of what we have going forward with the price, very similar to AUD/USD. If I look at this from a monthly chart, we've had a massive swing from the 2000s up to around about these equal highs. Then we had the C swing here back into demand. And we have this double top formation, which I know the price will run in the future. And so during the coronavirus period, and this is why I'm saying that every pandemic situation is all accounted for in the market. How I can put this to you is that whenever there's a financial crash or situation, the market takes the opportunity, or the powers that be take the opportunity to push prices or push the prices to where they've always wanted to take it, but they didn't have a narrative to do so. So in this case, if you notice, the price is perfectly pushed down during this coronavirus period to this area right here, back into this major demand zone, which has been the launch pad for us to go long. So if we were to think of this as market structure, we have A, we have these highs at B, and here is C. And so we should be looking forward in the long term for a stronger New Zealand dollar, so an ABCD pattern of this sort, okay, into the D. So sooner or later, we should get in the next, 6 or 7 years into the 0.90s and 91s, okay? So if you've watched us for years, when it does happen, make sure you remember this video. Anyway, so moving swiftly on, I'll delete this line here. Where are we at the moment? I think AUD/USD and NZD/USD are facing similar things. I do have similar economies in different ways. Geographically, where they are very close together. I believe they're like an hour and a half apart. So many of the things that affect them probably, or affect one country, could affect the other. They do have a great relationship, very similar accents. If it's different, I know you guys can tell the difference, so don't fight me, please. I'm sorry. But to me, it sounds the same. Well, from where we are, again, very, very similar. We've had this structure here where the price has broken, this same kind of 2-3 year trend line. Price has broken past and continue with this very strong push. And again, I believe the price is experiencing a normal reversal. What we've had here is that we've had the price take the high of 2017. The price managed to overshoot a bit and get over to the high, but it couldn't sustain that movement. But that is a good sign that we should be getting the price moving up there, especially if we're in this very strongly bullish bias. Okay. And what I'm going to do here is put the supply zone as where it is right now. So if I go to the supply zone right here, you can see that the price has entered into this very strong area of supply from 2017, which initially triggered this massive short, or was the catalyst for this short moving forward. Of course, there was several more supply scenarios which pushed the price to where it is. But this is where we are on, from this point of view. What I will do, I'm not a trend line trader again, but what I will do is to draw this trend line here. And we can see we've had the break of this bullish trend line. And so I do expect some bearish movement to take place short term. If I go to the daily time frame, you can see that the price has had a very strong short movement in the month of March, okay, breaking past many of these lows and closing beneath, which I believe was a sign of continuation. So if I go for the most recent low from 2020 is closed beneath, we can see that the price is hovering with a, if I put this here, the price is hovering right here with a very small range. Price is struggling to make bullish headway, and the price is selling off quite strongly. For me, this is signs that we should continue bearish, and I'm watching this area right here of demand that the price has entered into and flipped. What I would expect looking at this is for the price to make some more headway short. Okay. The next possible area of demand which could hold the price is all the way back down to here. So if I drag this forward here, this is what I'm looking at. And that would be my first target on the short side. I think I'm a bit more, looking at the charts, I think I'm a bit more poised for a short than I would be on AUD USD. I think it's a lot more clear on this time frame. And then my second target will be here. So if I'm looking at T1, I'm looking at T1 around this area of about 68. So T1 right here. I placed a crosshair right here. I'm looking for a target of roughly around about 60, 0.68696. All right. And target 2 probably will be down to around about here, even lower, but I'll make it conservative, roughly to around this area of demand over here. Very short area, but still responsible for a very strong long. So T2, I'm looking around the 66 region, 65. So if I put this T2 right here, I'm expecting the price to give us something around here of about 65,980, maybe slightly lower as a downside target. I'd be very surprised, but if you're watching this for a long, I don't think there's enough activity and technical foundation for the price to actually go long right here. If it did break past this area and return above it, that would be interesting to see. But for the moment, I do think we're going to have a bit of a bearish market on NZD-USD and AUD-USD, along with the fundamentals too, which kind of confirm that because of this, there isn't progress at the moment to solve the overarching fundamental of the pandemic. We may see, some bearish tones, maybe for this month of April, maybe May a bit, and then we may see some recovery, or we may get a very strong short to start off with and end the month in a very sweet long, who knows, okay? But in this case, I would rather want to play into the bias than against the bias. However, counter trend trading and counter bias trading is still necessary. The market doesn't go long forever, okay? So this is what I'm looking at, for the short term. Now, I know I said this is the last one, okay, but how can I forget the pound in the country that I live in? So let's have a look at the pound and see. All right. So I think the shapes of the charts are looking very similar, okay, but it doesn't mean we should be deceived into trading them the same way. Now, I don't know why I have these lines here, but pound USD from the monthly perspective is very bearish from what we can see here, okay? But if we just deal with where we are at the moment, again, as we can see from the coronavirus period down here to all the way back to 1.14s, we've had a massive recovery moving forward that hasn't stopped. And similar to the US pairs. Now, the reason why I'm using these pairs with the US dollar is for you to see the shape of the charts and to see correlation so that it can help you to have a picture here as to what the price is doing. Now, the pound has been going long for quite a while, but has recently experienced this spike into this area and the short, okay? And the price is still making its way quite strongly short. Now, the trend line from here, if you were to draw a trend line, is still intact. So if you wanted to visualize this as a bullish trend, we're still intact right now. Okay. And if the price successfully stays around this area, which it lines up with this weekly demand area, then we could see a recovery in the pound again. But it really does depend. Okay. I mean, price at the end of the day can do whatever it likes. Okay. The powers that be have very deep pockets, and the institutions that control the market have very, deep pockets. Now, zooming in a little bit to have a look at where we are. After the price spiked into this area, we can see the price forming these lower highs moving forward. And at the moment right here, we're at this point where the price is just piercing beneath the low of March. And I believe that's set to continue. And if it does, I would like to see some more short action, okay, which I think is in place and quite healthy because we've been going long for a very long time. And I think that this will be a healthy pullback in the continuation of the long if the pound continues to go long in that fashion. Now, just to keep in mind that pound USD, now I'll do the data breakdown another time, but pound USD is probably one of the most highly manipulated pairs, okay? Institutions love to be able to push price around in a certain way to cause manipulation. Okay, it's a very liquid pair and a high volume pair, very highly, exchanged, asset, pound USD. So you have to keep that in mind when you're observing the price. There's a lot of wickage that takes place. And so you want to have a healthy perspective and focus on the market structure. Now, to me, the market structure is still bullish until further notice. We can see tones of a bearish movement, which seem to continue. I would like to see how the price will behave beneath this, low. And as the price enters into this weekly demand, I would like to know the mind of the price, whether it would like to stay around this, low and reverse to go long, or if you would like to continue these bearish tones and continue further. For me, I have my eyes on the next area of demand at this low right here. So my first target really is about 1.34494 for a first short if the price does give us that right here. I'd like to see what the price does here. Let's see if we can run this low. Okay. As a conservative target, the next low would be right about here, which is only about 116 pips. And to be honest, with where we are right now, the market could do that, in the London session, Monday at 8 o'clock GMT, 7 o'clock to 8 o'clock, somewhere around there, moving forward into 10 and 11, who knows? If I was going for target 2, I'm looking around about here. And possibly we could even see the price getting, now we've had some spike in here indicating some stop losses around this region, very much so, or some strong stop losses. So possibly we could actually see the price even dropping a bit lower and getting itself down around about here. And as a cheeky target, I think the third target, if the price really wants to push short, we may see the price drop back beneath or around about the 1.31 and back down towards the 1.30 region. That can happen. All right. And this really does matter on, fundamentals and also the strength of the dollar. If the strength of the dollar sees a short-term, mid-term, increase, and I'll be keeping my eyes on that, we may actually see the pound weakening against the US dollar to this degree. All right. So these are my targets, very simple technical analysis, nothing heavy, but I hope you guys enjoyed that video and I'll see you in the next one. Take care.